Hello everyone, welcome back to Upside Down Data. In this video, I'm going to talk about the biggest source of fear, uncertainty, and doubt in the market today, which is the meltdown that's going on at Celsius. I'm going to explain what's happening there, and we'll also look at a couple competitors to Celsius to see how they're reacting to the news. So if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So first, a quick check-in on Bitcoin's price, just to set the stage and get some context. It's currently trading at about 24K. As you can see, it tested earlier today the 200-week moving average, and that was the first time it had done that since March of 2020. The 200-week moving average is really important. It was the bottom in 2016 and 2018 and 2020. Now we're all waiting to see whether it's going to be the bottom here again in 2022. So this is a really important price level on a historical basis, on a macro time frame. Let's take a look over here at the MVRV. This is an on-chain indicator, and it gives us another reason to think that the current price level is really important. It's currently testing the break-even point on the MVRV. This is the market value to realized value z-score. And just to oversimplify a little bit and explain what this is, this basically tells you whether the market is currently in profit or loss on average. The z-score is a standard deviation. And so when the z-score is above 1, it means that the market on average is in profit. And when it's below 1, it means the market on average is in loss. Today, the MVRV z-score hit 1. And that means the market has returned to the average cost basis for all coins. This is a 1 day old chart, so you don't see it actually touching, but adding June 13th here, we get a touch of that 1 level. Unfortunately, the market has not bottomed at about 1 MVRV in the past. It went lower than 1 in 2011 and 2015 and 2018. So we have agreement between the MVRV and the 200-week moving average in terms of the idea that this is an important level. This is critical level to determine whether we're above it or below it. But it does not agree with the 200-week moving average about this being a likely reversal point. So there's some confluence about this being an important area to watch. But whether or not this is a good candidate for the market to bottom is less clear. So that's a little bit of context. Always good to have some context when we're talking about these kind of fundamental market factors that we're going to turn to next. So what's the immediate catalyst for the dump? Well, we need to look at Celsius for that. Celsius is a crypto lending platform. Basically, the way it works is you lend your crypto to Celsius and you get paid an interest rate. So every week you get a little bit of cash, and the platform can use your crypto. They can lend it out to others for a fee, or they can invest it themselves and accrue interest, in DeFi or whatever. So yesterday, Celsius announced a pause on withdrawals. This obviously has people worried about their own funds if they're invested. It also has people worried about Luna style collapse, where people's collateralized assets lose their exchange value and people are left holding worthless coins that they thought had a safe and secure value. Here is the letter that Celsius sent out explaining this to their community. Due to extreme market conditions, they explained, they're pausing all withdrawals, swap, and transfers between accounts. They say that they're doing this to put Celsius in a better position to honor its withdrawal obligations over time. Note that they're not specific about what over time is supposed to mean, how much time, and what that's supposed to look like. Acting in the interest of our community is our top priority. They claim to adhere to their risk management framework and to be following their terms of use. But this is, all putting lipstick on a pig, I think, to a large degree, because what's going on behind the scenes is pretty concerning. What's going on is that basically Celsius does not have enough collateral to return their customers' funds. There are a few immediate causes of this. Celsius lost a lot of money in the Luna UST collapse back in May. They also lost even more money more recently when ST ETH lost its peg. You've probably heard about what happened to Luna, but to explain the ST ETH thing quickly, ST ETH is a token you receive when you stake ETH on Lido. Lido is a quote unquote liquid staking platform. It's called liquid staking because when you lock up your token, in this case ETH, you get a derivative token in exchange. And that allows you to stay liquid, and you can use that derivative token, which in this case is called STETH for staked ETH. You can use that for whatever purposes you want. You stay liquid. Then later on, you can trade that STETH back for ETH. It's supposed to be exchangeable one for one with ETH when the Ethereum upgrade happens. The problem is that STETH lost its peg, meaning that it went down in value relative to ETH, and this wiped out millions more in liquidity from Celsius. So that's the immediate causes. But more generally, it seems like something like this was only a matter of time because even before recent events, Celsius did not have enough liquidity to pay back their customers. Here's a tweet that saw this coming. Um, they simply don't have enough liquidity to pay back their customers, and that's only gotten worse recently. What that means is that if people try to withdraw their funds all at once, that's called a bank run, then Celsius was always going to be screwed. It's not exactly the same as what happened with Luna, but there are some major commonalities. And there are other companies and assets in the space that are also under collateralized and therefore vulnerable, most notably Tether. But that's topic for another day. So, um, just note that this is not necessarily confined only to Celsius, but it's happening right now with Celsius. Like I said, Mike Alfred has been really good on this. Follow him on Twitter if you want to continue getting updates about what's going on with Celsius. Um, and to his credit, he posted a warning about this back in May. He saw exactly what was going to happen coming. Um, One of the things he pointed out as well was that the Celsius leadership team has some shady business in their past. For example, their CFO was arrested in November for money laundering. So, not necessarily the most trustworthy crew to begin with. And the situation now is that the market is cratering, and Celsius is just trying to avoid getting liquidated and put out of business entirely. They've been adding collateral to their DeFi positions to try to bring down their liquidation price. It was at about 22.5K, which um, almost got touched. They were right on the verge of getting liquidated and put out of business, but they've been adding collateral. And now apparently their liquidation price is closer to 18K for Bitcoin. So if Bitcoin were to get down there, they would again be at risk of losing everything. So they now have a little bit of breathing room. But honestly, at this point, no one can say with confidence that the price won't go that low. Celsius is also moving the liquidity that they have, which means hundreds of millions in crypto to the FTX exchange. And if they start selling that, which it seems like they're kind of ready to do if they need to, that'll obviously bring more pain to the market. So that's the situation for Celsius. What about Celsius's competitors? Because it's not the only game in town. And in particular, BlockFi and Nexo are waiting in the wings here. They're watching this and they're commenting on what's happening. And both of them are making confident noises right now. BlockFi announced last night, their CEO, Zach Prince, announced that they were operating normally and have no STE position, so they didn't lose anything there. And they claim that their risk management is functioning as intended. But then this morning, and you can't make this up, BlockFi announced that they're laying off 20% of their workforce. And so my reaction to that is if that's what success looks like in this industry right now, then it's safe to say that the collapse is not over. Meanwhile, as you can see right here, Nexo has offered to buy Celsius out. This would mean taking on its loan obligations and its customer database. That's, I think, obviously a more convincing response than BlockFi's. But at the same time, it doesn't seem like Celsius is interested in the offer. That makes it a little bit hard to know for sure whether Nexo is really serious about the offer. So is this about PR for Nexo, or are they really feeling pretty secure in their position right now? Regardless, one consequence of this is definitely going to be to increase scrutiny on these lending platforms. They generally keep a pretty low profile in the industry relative to some other sectors. Their image basically has been, at least what they've tried to present, is they're relatively boring financial infrastructure. They're like banks, they just help things run. They are supposed to be the low risk yield options in an inherently high risk market. But the Celsius collapse shows that that's false. Crypto lending platforms are risky, just like DeFi platforms are risky. And that's important to keep in mind going forward. So, anyway, hope you guys found this useful. Thanks for watching.